Welcome to the June 5th Advance Report for McGowanGroup Asset Management clients. Thank you for joining us today. The intelligence report for this week is somewhat of a warning. Fabulous five. Five companies accounted for over half of the S&P 500 return year to date, which is about 8%. And I wanted to go look at the values to say, what does that portend for forward returns from the equity indexes and from the individual companies? First on the list, Microsoft, trailing 12-month PE 30. If you flip that over, it's a 3.3% earnings yield with just a 10% growth rate. That means 3 years out, you're still making about 4% on the capital. That's room for disappointment according to the numbers that we've looked at in the past. Apple, this is the most reasonably priced actually out of the fabulous five that have accounted for the big part of the equity index gains. At 17.7, that's a forward return above 5% just based on earnings yield to owner with a 17% growth rate. That means 3 years out, you're looking at 7 to 8% just from that growth. More reasonably priced, but in Apple's history, as our research team has pointed out, in Apple's history, it's a little bit ahead of itself according to its historic valuations. Oh, Google, Alphabet. 33 times, so that's about a 3% earnings yield to owner if you own the entire company. A nice healthy 19% growth rate, but that still takes quite a few years to get your earnings yield up to just 5%. Room for disappointment here too. Facebook, almost 40 times earnings. We'll call it a 2.6 or a 2.7% earnings yield. Nice 24% growth rate. Go out about 5 years, well, and you'll have yourself potentially a 6% earnings yield to owner. Again, the forward returns here are not dissimilar from 1999 before the tech wreck. Amazon, 183 times earnings. Well, that's a room for disappointment, we'll call it. Just a fraction of a percent earnings yield. Nice growth rate though, but you'd have to wait a good long time for your earnings yield to get up to the potential return target that most investors have. So this week's report does come with the warning that indexes appear to be overvalued and the leadership has gotten very, very thin. Be sure to come down and see us at the Crescent for real solutions with including a fixed income strategy. I'm Spencer McGowan, President, McGowanGroup Asset Management. Thank you for being with us today.